All right, I'm back, and I want to talk about the auto industry with everything going on right now in Ukraine. If you've been paying attention to the news, Volkswagen has pulled their production in Russia. I think BMW, places like this, are going to have a lot of issues as well. We don't know if this is going to expand more into Europe. It, that may happen if something goes wrong here in one of the NATO countries. We just don't know. That's just speculation at that point. But there's definitely going to be an effect on their earnings. But what I wanted to go over were a lot of these auto companies are priced a lot better than some of the stocks out there people are buying. So I wanted to take a look at a couple of these. And I want to start off here with Ford. So if we look at kind of the American brand of a car here, just looking at the chart, everybody knows what's happened since COVID. Automakers, I mean, prices have gone just bonkers. You're seeing the inflation in used cars. We have supply issues due to these chips. There's a lot of different types of problems going on here. But what you can't see on this chart are the financials for these places. So, for example, Ford, their PE ratio is 3.79. That's really, really low. So that's the price you're paying for that stock relative to the earnings they made, right? So they made $4.45 per share. They have a dividend of 2.27%. I have some of these notes written down here I researched earlier. So to me, this is actually a decent buy over the long run because I know I'm getting, 2.25% dividend, at least for the time being. I'm not way overpaying for the stock, being that the PE ratio is 3.79, right? So that's great. Looking at the trends on the chart here, if we go way out, right, I want to take a big picture view here. Now I have it set up on a weekly price range. At the price it's at right now, we're kind of hitting the point back in 2004 right here. Who knows if we're going to get support here or not? I would suspect that um, vehicle prices will continue to rise somewhat. They may have been overheated because it had grown so fast. But if you look at this level here, this could end up being a really good support line for Ford. We'll have to see what happens with this war if this spreads into other countries. And I think auto manufacturers are going to take a hit overall. I mean, everybody's going to take a huge hit if we go into World War III, obviously. So there's a whole different game you have to play. That's where gold and dollars and maybe crypto even come in handy. Um, Unfortunately, war manufacturers, people were building weapons. That's where you end up having to go. But anyway, if we take a look at this, I think it's likely to go lower, but I don't know that I would care if I'm buying for the long term, right? Somewhere in this zone, somewhere between maybe this $12 and even now, because you're getting a dividend on it, right? It's not more than inflation, but it's something, and you got room for growth. They actually make money, so that's a good start. If we go down, take a look at Volkswagen. Now we can see what's happening with them after this whole mess going on in Ukraine. We were trading down. We can see a clear trend right here, right? We were going this direction, which a lot of times you see this and you end up having a breakout. So typically you'll see it trade down in this channel and then eventually it makes its way up. You start to flatten out here at the bottom. You'll come against the top of this, you break out, and you move on to new prices. But due to what's going on right now in Russia and Ukraine, it's just a different world. We'll have to see what happens with this. But either way, looking at this chart over a longer period of time. Now, by the way, this, with Volkswagen, their stocks here, when you see the price, you might get a little confused. It says $21.48, and then you see another one down here. It's $212. This is because there are different ones you could buy. This is actually 1/10 the price of the real common stock. So this is really the common stock right here. Same chart. It's just the other one you can buy 1/10 of a share, right? So either way, same thing. But zooming out on this chart, we can see this is just the price it's at. I mean, there's good support just even right below that, down in the 160, 170 range. We'll see if this turns into support. But really, at this price, you're you're getting it as cheap as it was back in February 2018. And even though this was a spike, if you went back in time here, you're talking 2015 range. And if we see this go lower down into this 150, 160 range, I mean, you're talking about a time when you could have bought it in 2012, right? That's not that far off of, the big. I mean, look at this back in 2008, right? So I think that's a little crazy, but their PE ratio is 5.37. Their earnings per share were $39.56 per share. Their dividend was 2.67%. And of course, that will change as the prices go up and down. But I mean, to me, that sounds pretty good, right? It's a fair buy. But of course, keeping in mind that we could end up in World War III, manufacturers over in that area of the world could get hit really hard, right? We don't know what's going to happen with that. But other than that, looking at the financials, I think, hey, that's not bad, um, based on at least the PE ratios. We'll have to see how their earnings continue to do during these times. But if we take a look at Toyota, of course, Toyota isn't known just for their longevity, but man, their stock is similar. Look at this. I mean, look at this trend long term. Oops. I mean, look at this. Look at the direction of this. I mean, I could see there being a good correction at some point coming back down, maybe for some support in this zone. We'd want to see. We'll see if it bounces off this and continues to go back up somewhere around that 150 range. But Toyota has done really, really well, and their PE ratio is a little bit higher, 8.86. So you're paying a little bit more for that stock, but I mean it has been so consistent. It's just a great company. But their earnings per share were $19.27 per share. They also had a 2.66% dividend recently. We'll see how that goes based on, these prices coming down. That dividend could go up. But again, they're in an area where if China has issues with Taiwan and this kind of bleeds over towards South Korea, the Philippines, and Japan, I mean, obviously we'd have a massive war at that point. All bets are off. So keep that in mind. We take a look at BMW here real quick. All right. Looks like it's losing some strength here on the RSI. At some point, it's going to be oversold. But again, we'll just have to see what happens with Russia and Ukraine. I think it looks like Russia ultimately will take Ukraine. I don't know how that ends up affecting the overall economics for the auto industry. We'll have to see if sanctions are ever lifted. It could be a couple of years, even if they did take Ukraine. So they won't be buying those vehicles. I don't know how that's going to play out. But either way, they also had a PE ratio of 4. Their earnings per share were 6.64, and they had a dividend of 2.9%. So these actually aren't bad. If you look at Honda Motor Company, this is another, great company. I like Honda and Toyota. I think they've made some great cars over the years, and we can see their stock chart. Now, what would concern me about this chart, I mean, this is a long-term chart, but typically when you see these points start to make lower highs, you see one here, one here, one here, and then you get a lower low, lower low. Now it looks like we broke that trend. You can kind of see this with Honda. Now we're heading back this direction. If we end up getting a like say the S&P 500 sells off, everything's getting crushed, and this makes a newer low. Of course, you have support right in this area. We'd have to see if that holds up. It has quite a bit of support over here, so I wouldn't see it going past this $17 range anyway. But that would be an example of it making a new lower low, which would suggest that this trend here is continuing downward. And at some point, it would have to break out of that. Who knows where that would be? But to me, it looks like right here, if we zoom in a little bit, it looks like it might have broken that trend. Typically, when you see this rounding top, it's a topping pattern and you see a huge sell off. But that doesn't look like it's the case here right now. It just looks like it's losing some strength. On the RSI here, we're breaking this mid zone, and we'll have to see if this becomes resistance here. That would tell me this is going to trade lower. But overall, still, Honda, their PE ratio, kind of like Toyota, it's a little higher than Volkswagen, Ford, and BMW, but it's 6.97. The earnings per share were 4.02, but they had a better dividend than everyone. It was 4.99%. So that's pretty nice. And again, this is a great company. I would say Toyota's chart looks like a lot better than this right now, though. But long term, we'll see what happens here. One more. I know people are interested in this. I'm sure it's got to be up here somewhere. Tesla. Now, I'm not a fan of Tesla's stock. Um, to me, this is a growth stock. It is just waiting to crash. This is not a good buy. Now, I understand the idea that, well, they do a lot of other stuff other than build vehicles. Totally get that idea too. But if you're an investor, you're not investing in price, right? You don't invest for a stock price. You can speculate and say, yeah, there might be some more buyers that come in and push this higher, but you just be speculating at that point. If you're looking at investing, right, you want to know you're buying a piece of this company, right? So you want to see their earnings, not just their property, their plant and equipment and those types of things, but you want to know what their earnings are, right? Well, Tesla, their PE ratio is 171. That means you're paying 171 times their earnings, right? That's crazy. And now it was much worse than that. Up here, I think it was around 300, right? But since it's fell down a lot here, it's come down quite a bit. But their earnings per share are $4.90, and they just recently hit that. They'd been negative for a long time. Now, looking at this trend, if you start back here in 2020, right? I mean, look where it was peaking out right before the crash in 2020, 196, right? Now, of course, they've had some stock splits and things like that. But I mean, this trend is just insane. But this is all price driven speculation. Everybody thinks they're getting rich. And unfortunately, these don't end very well. I wouldn't be surprised to see Tesla if investors or speculators sell out over time. I wouldn't be surprised to see it fall down into this 200 range, at least the 400 range, right? That would be very, very realistic. And you'd have to come down to, I mean, still that PE ratio is probably down in this area. It's probably still 20 or 40 or something. But anyway, I only got a minute left. So go ahead and share this, like it, comment below. I don't know what platform you're watching this on. It could be on a different social media platform. But be sure to comment below. Other people might comment and have questions or feedback or their ideas. This is being recorded on TradingView, and I can't specifically mention other social media platforms or they will ban this video. But anyway, if an ad pops up and you are watching from somewhere else, just watch the ad. This is free content, and eventually they may even pay me for it. Doesn't cost you anything, but maybe 30 seconds. I'll see what I could pump out here. Maybe tomorrow, if I have a little bit of time, I want to talk about some of the other market information, what the Fed's up to. But anyway, I am out. Good night.